This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Super Tuesday, the 20th straight Tuesday gain propels the Dow into record territory.
Hot houses. Home prices spiked the most in 7 years. Has housing become the driver of the economy?
And back in black, once broke, California is now sitting on a pile of cash. And it's not alone. The stunning turnaround in state coffers. All this and more tonight on Nightly Business Report for Tuesday, May 28th.
One way up. That was the direction of the stock market today. The markets bounced back from last week's losses with the Dow settling in record territory. The catalyst? Housing and the consumer. Home prices jumped almost 11% in March compared to a year earlier, and that's according to the S&P Case-Shiller. We'll have more on that in just a moment. And a survey from the Conference Board shows that Americans are feeling more confident about the outlook for the economy, the highest confidence level in 5 years. All in, the Dow rose 106 points to 15,409. That's the first time the Dow has closed above the 15,400 level. The Nasdaq was up 29. The S&P 500 added 10 points. It was a bullish way to kick off the holiday-shortened week. Optimism was the word of the day in stock markets around the world. The buying started even before the opening bell rang on Wall Street. Stocks rallied from Japan and China to London and Frankfurt as central bankers promised to continue pumping money into their economies and to keep interest rates low in order to promote global growth. Here in the U.S., investors were encouraged by that report showing home prices are red hot and consumers are more upbeat about the economy. For today, investors shrugged off worries that the Federal Reserve will begin to taper its stimulus program, something that spooked the markets last week when Fed Chief Ben Bernanke testified on Capitol Hill. The Dow surged as much as 200 points in the first hour of trading and then closed at a new record high, making this the 20th Tuesday in a row that the blue chip average crossed into record territory.
I think, they're all interrelated. The market being up where it is, consumer confidence being, getting better, and the housing market improving vastly. They're all interrelated. When one person feels comfortable about their economic condition, they're more apt to go out and spend money, more apt to go out and buy houses, and more apt to invest in the markets.
So how much higher do stocks go from here? Many market pros say the major averages are due for a correction and say that would be healthy for even more rallies.
I thought maybe the tapering talk would have done it, but when it does come, we're going to put some more money to work in equities.
Well, while stocks climbed, bond prices didn't. In fact, the yield on the 10-year hit 2.17%. That's its highest level so far this year.
Well, with that spike in home prices we talked about just a moment ago, best in 7 years, some are wondering if the rebound in housing can drive the overall economy higher, where others are concerned about prices rising too high, too fast, and warning of some housing headwinds on the horizon. Diana Olick now digs into the details.
Weak supply and strong demand are pushing home prices higher at a rate not seen since the height of the housing boom.
Right now, they're healthy. If we go far beyond this, so we're talking in 6 months or a year from now about 20% gains, then I think we get worried about bubbles again.
Home prices are still nearly 30% below where they were in 2006, and lending conditions today are nothing like they were back then.
Without low mortgage rates, the housing market would not have had near the recovery that it's had. So it's really been that really combination, in a sense, a real potent brew of very low mortgage rates, which has helped keep demand high, and that's meeting constrained supply.
During the housing boom, easy credit allowed homeowners to cash out equity and pump it into the economy. No such luck today. And housing starts, which usually drive the economy, are still well below historical norms, never mind where they were during the boom.
When you look at this, buying and selling existing homes is very nice. We all feel good. The prices are going up. It doesn't add anything to GDP.
The recovery is, however, fueling the stock market. The home builders are already expensive, so investors are now turning to alternatives like the banks, mortgage insurers, even truck makers like Ford and GM, thanks to contractor demand. Investors are also going back to an old game, flipping.
When we talk about some of these speculative markets, again, that's going to be those hardest hit areas. That's where the speculators are going to come in, the home flippers, and that's what's going to really drive those bargain lookers, those deal lookers.
The difference today is these flippers can only use cash, which thankfully takes the banks and the broader economic risk out of the equation. For Nightly Business Report, I'm Diana Olick in Washington.
Joining us now with more analysis on all of today's economic and market developments, Mohamed El-Erian. He is CEO and co-chief investment officer at PIMCO. It's the world's largest bond fund company. Mohamed, great to have you with us. You heard our report, and that investors are buying stocks on reassurances from central banks pumping money into their economy. So, is this stock market rally healthy, and what are investors in for when things reverse?
So this rally, which has been a wonderful rally, has been driven by three factors. One, you're absolutely right, a ton of liquidity being injected by central banks. Two, technicals. There have been inflows into the asset class, people that were underinvested. That has boosted prices. And three, and much weaker, the fundamentals. Today, finally, we got good news. Last week, unfortunately, the news was less good. So we've come so far based mainly on central banks. In order for us to stay here and go further, we need the fundamentals to pick up. We need the economic conditions to validate the high prices. Otherwise, this wedge that the central banks have created between fundamentals and prices will be very difficult to maintain.
So what we've got, Mohamed, if I'm understanding you, we've got lots of liquidity, but we have a deficit of real economic growth. Why hasn't the extraordinary sort of experimental policies that have been undertaken by the central banks around the world, why hasn't it produced growth? Can it? And what happens if it doesn't?
So three reasons why it hasn't, Tyler. One is called the liquidity trap, that you're in a situation where you need to put a ton of liquidity in there in order to trigger a response. Two, we still have structural impediments. So we emerge from the crisis healthier. We can walk as an economy at about 2%, but we can't sprint because of structural impediments. And then third, there's some genuine question marks about what will the tax system look like in 2 to 3 years. So companies are holding back. If this continues, and if we don't get the response that allows companies to drive up their revenues and maintain their profits, then we will have an issue because prices would have disconnected too far from fundamentals.
All right, so what does all of this mean for investors and what they should be doing? Number one, you run the world's largest bond fund. So I want to know what you're doing with the clients that have, bond portfolios. What should individuals do with their bonds? And I know you run stocks too, so what's your advice on stocks? What should investors be doing to position themselves right now?
So at these levels, and given that we're starting overweight risk, so we've been benefiting, our clients have been benefiting from this rally. At these level of prices, we are walking away from risk. We're not running away, we're not sprinting away because central banks are committed, but we're walking away. So we're taking money off the table because we think that there may be better opportunities. We also are keeping an eye, and this is very important, on the liquidity conditions. We saw some very strange behavior in markets in the last few days that raise questions about the functioning of the markets. So we think that this is a good time to walk away from risk, not run, walk away, especially if you've started with an overweight position in risk assets. What was the unconventional behavior that you saw? Elaborate on that. That sounds very interesting, Mohamed. So we're seeing liquidity break down in certain segments of the market. And Tyler, we pay very close attention to the functioning of the market. And we're seeing a liquidity desire that's cascading across different segments, that's putting certain... Where precisely? So for the high yield market, for example, today, there was an issue that there wasn't as much liquidity as you would normally expect. So we're keeping a very close eye. Now, a lot of people will say, well, that's normal because, after all, when central banks are no longer just the referees of markets, but are also playing on the field, they're going to change the functioning of markets.
Mohamed, I just want to follow up on what you said, walking away from risk assets. What do you put in that category? Like, is gold in that category? Are some stocks in that category? What do you mean?
So mainly stocks, high-yield bonds. If you look at the absolute level of yield, Susie, as opposed to the spread, the absolute level of yield, there's a real question mark as whether that compensates you now for the risk. It's funny, but if you watch people when they are proposing, suggesting you should buy things, it's no longer about the fundamental value. It's only that it's cheaper than something else, right? But at some point, cheaper than has to be supported by fundamental value. And we're a little bit worried that the disconnect is getting too big.
Okay, all right, we're gonna have to leave it there. Thank you so much, Mohamed. It's always a pleasure to have you on the program.
Thank you.
Mohamed El-Erian of PIMCO.
Well, last week we told you about a huge deal in the works in the healthcare business, and today it became official. Generic drug maker Valeant is going to pay $8.7 billion cash to a private equity firm for the eye care giant Bausch & Lomb. Shares of Valeant soared when rumors about the takeover started to surface last Friday. Shares closed nearly 9% higher today and are up more than 20% since word of that deal surfaced.
A pleasure cruise turned into a nightmare for thousands of passengers aboard Royal Caribbean's Grandeur of the Seas after an early morning fire broke out in the rear of the ship on Monday as it headed from Baltimore to the Bahamas. Luckily, no one was injured, and the cruise line chartered flights to take passengers back to Maryland, fully reimbursing them for their trip. Shares of Royal Caribbean fell 1% today.
From a near disaster on the seas to more trouble on the nation's railways, a CSX freight train derailed in a Baltimore suburb today, sparking a fire and the collapse of several nearby buildings. Fire officials evacuated anyone within a 20-block radius of the incident. Videos posted on Facebook showed a devastating explosion after at least 3 rail cars overturned. Hazardous material teams are on site now trying to determine whether residents are in any danger. Shares of CSX closed down a fraction today.
And coming up on the program, call it a rags to riches story. Near broke states turning it around and now flush with money. We'll look at what it all means. But first, here's a look at some companies hitting 52-week highs.
Walmart will pay $81 million after pleading guilty to charges the company dumped hazardous waste in California. The plea settles misdemeanor charges of negligently dumping pollutants into sanitation drains across the state. Part of the fine will also cover charges in Missouri. Walmart settled similar charges in California 3 years ago and agreed then to pay $27 million.
California is golden again. Just 3 years after California's budget deficit hit $60 billion, the state is on track to post a surplus this year. And it's not the only state that's flush. Mary Thompson has more.
California is regaining its golden glow. Budget cuts and higher taxes putting it on firmer fiscal footing, with this year's state budget surplus now estimated at $1.2 to $4.4 billion. And California's not alone. The National Association of State Budget Officers, or NASBO, projects a significant majority of states will report bigger than expected surpluses. Spending cuts, a better economy, a stronger stock market, and income push forward into 2012 in order to avoid paying higher taxes in 2013, all behind these larger than expected windfalls. Windfalls anticipated by municipal strategist Peter Hayes.
We've had 12 consecutive quarters now of better revenue growth. It's been slowing a bit, but we've seen this coming for some time.
The extra cash triggering sparring within state legislatures. In Ohio, Iowa, and Indiana, among other states, governors want tax cuts. Tennessee looking at boosting spending on health care and prisons. And in Florida, Governor Rick Scott wants to increase teachers' pay. It's a far cry from late 2010. With the national economy slumping and federal aid drying up, noted analyst Meredith Whitney told CBS's 60 Minutes that you could see 50 sizable defaults, 50 to 100 sizable defaults, amounting to hundreds of billions of dollars. The sell-off triggered by those comments, though, now a distant memory in the muni bond market.
In general, the muni market's reflecting better state budgets.
The risk now, will states spend wisely so they don't come up short again? NASBO recommends the extra cash go toward a rainy day fund, capital improvements, or towards underfunded pensions. That may not seem sexy to voters, though it could prove better for the state's fiscal future. For Nightly Business Report, I'm Mary Thompson.
And in today's Market Focus, the spotlight is on the winners. Let's begin with Dow component Merck. It led the pharmas higher as Jefferies upgraded the company to buy from hold. It describes Merck as among, quote, the best restructuring plays in the pharma group. Kind of a backhanded compliment, you might say. But investors weren't questioning. They pushed Merck up almost 1% before it fell back to close at 47.62. Well, United Healthcare, another Dow component, and Humana announcing they will offer small employers a self-insurance option later this year as companies try to mitigate the 2014 costs of the Affordable Care Act. United Healthcare led the Dow 30 up 2%. It closed at 63.34. Humana up similarly, and it closed at $80.55. Moody's raised its outlook on the U.S. banking system from negative to stable. That and the housing news made financials attractive today, and State Street, the big trust bank, was the leader of the pack. State Street shares rose more than 4% to $67.15.
Ford zoomed to a 52-week high today after Kelley Blue Book predicts sales will rise by 8.7% in May. Ford also boosted by a Barron's report suggesting that Europe's demand for new vehicles is bottoming and that Ford's profit is likely to accelerate as the European economy improves. Ford shares up $15.28. That's an increase of more than 3%. NetApp, this is the data storage company, announced it had certified Cisco's new storage switches and would begin reselling them in its systems. That sent shares of both companies higher, with NetApp leading the NASDAQ 100. NetApp closed at $37.71, up almost 3.5%, while Dow component Cisco rose 1.5% to $23.89. And from Tiffany, sterling quarterly results. Earnings and revenues came in better than expected as business improved in all regions. Tiffany reported store sales up 8% for the quarter and reaffirmed its outlook for the year. Shares of Tiffany soared to a new high before closing at $79.22, up almost 4%.
Meanwhile, outlet malls are also seeing stronger sales, according to our next guest. Stephen Tanger is the president and CEO of Tanger Factory Outlet Centers. Today it celebrated the 20th anniversary of its big board debut, and there is our next guest ringing the bell. Steve, welcome. Good to have you back.
Thank you, Tyler.
Let's talk about what the consumer's doing today. The report is that consumer confidence is the highest in something like 5 years. Tell me about your customer traffic over this past weekend, how it compares to a year ago. Are they more of them? Are they spending more? What's happening?
Well, initial reports from our 43 shopping centers in 26 states in Canada are that traffic was up slightly, 2 to 3%. And we anticipate sales will be up by a similar amount. So in spite of the weather and all of the other issues that led to this, we are looking forward to a very positive Memorial Day weekend.
And tell us, Steve, a little bit about the retailers. What are you hearing from them? I know you talk to them a lot and you're dealing with a broad section of retailers. Are they as optimistic?
Our retailers are optimistic. They've come through the recession, as have other businesses, focused on their merchandising, their pricing, and the inventory and display is the best I've seen it in close to 30 years. So our retailers have done a fabulous job, and the consumers are responding. They're coming to our Tanger outlets around the country in greater numbers, and our sales are up.
Tell me a little bit about two things that I notice in the outlet business. And I go out to your one in Riverhead on Long Island from time to time. But I notice two things. One, it would seem that there are more companies trying to compete in your space. That's number one. And number two, it seems like the outlet malls, which you guys were one of the pioneers of, have come closer to the major metropolitan areas. What kind of change in the dynamic or danger risk does that pose to you?
Well, let me take it in reverse order, Tyler. We've been doing this for 32 years, and yes, outlet shopping centers now are closer to the metropolitan area or the tourist location of that choice. We are very fortunate to have led the way and created an industry that is a true distribution channel today. So we are looking forward to many years of continued growth. We welcome competition. This is America. This is the capitalist environment. Success breeds competition. In our sector, which is a unique sector, it's easy to announce a project. It's very difficult to get one built. But there's a long runway to grow in the United States and in Canada for outlet centers, new outlet centers. We anticipate in the next 10 years, as many as 100 new outlet centers can be built on an existing base of about 150. So we are a small niche, but a high growth company and a high growth industry.
We have half a minute left, and I do want to ask you about what the market for commercial real estate is like. I mean, we've been reporting a lot about housing. You heard our report about how prices are going up and a lot more buyers. What about in the commercial space?
Well, we're in the retail space, and the outlets do not trade very often, and they trade at low cap rates or high valuations because these are not replaceable assets. They're world-class assets, and when they come on the market, there's a feeding frenzy to buy them.
Steve, thank you so much for being with us, and congratulations again on the 20th anniversary of your listing.
Thank you, Tyler.
And coming up, you've heard of the friendly skies, but those skies, are they safe from computer hackers? We'll take a look, but first a look at today's most actively traded shares.
The designs of more than 24 top U.S. weapons systems have been compromised by Chinese cyber spies. That's according to a military report obtained by the Washington Post. On the list, the F-35 Joint Strike Fighter. This is the most expensive weapons system ever built, with a cost expected around $1.5 trillion. The White House says cybersecurity will be discussed next week when President Obama meets with China's president.
And with all the talk of hacking lately, it makes people wonder, what's the next target? Critical infrastructure like our energy grid, financial institutions, and the telecom system all get special attention. Transportation also falls into that category. And while there have been no cyber threats toward the airlines, at least none that we know of, Scott Cohn tells us there is one person who thinks this is a real safety concern.
Brad Haynes was born a hacker.
I was one of those kids that was always curious, always liked science. Took apart the vacuum cleaner as a kid, always wanted to know how things worked.
Haynes, who goes by the hacker alias Renderman, does IT support for a small company in Canada by day. Sometimes by night, he wows his friends as an escape artist. But his real passion is beating something tougher than handcuffs: high-tech security systems.
A security system is supposed to keep people out. Well, finding ways to bypass that is kind of neat.
His latest target, the FAA's next-generation air traffic control system, which, when it's fully in place by the end of this decade, is supposed to make flying more convenient and dependable. Renderman says what it really does is to make the whole system vulnerable to hackers.
No good is going to come of this.
The problem, he says, is that the system uses GPS data instead of just radar.
The problem with this is that the signals that they're using are unencrypted and unauthenticated. Because it's unauthenticated, you can't prove that this actually came from the real plane.
In theory, that means hackers could mess up the system by generating flights that don't exist.
You could theoretically ground everybody.
Or they could target a real flight with frightening precision.
Anyone can now generate the same kind of data and inject it into the system for whatever nefarious purpose they can imagine.
Renderman and a fellow hacker put data that would be used in the FAA system, known as NextGen, into a flight simulator to show what could happen if the system is hacked.
We were able to create a flight. We were able to take off from San Francisco Airport, circle over the bay, come back, and buzz the tower.
The consequence of putting a ghost flight on the air traffic controller's panel could be disastrous.
The air traffic controller is one of the most stressful jobs out there. Now, if I suddenly injected 50 extra flights onto their radar screen that they hadn't expected, they're going to be panicking, trying to figure out what's going on.
University of Texas professor Todd Humphreys, an expert on navigation systems, believes Renderman is onto something, a potentially catastrophic flaw that could put all of us at risk.
It ought to be obvious to the FAA. This is an obvious problem. This is something that is using antiquated technology from the 1980s.
Renderman says he brought his evidence to the FAA, but claims they ignored him. We asked the FAA about that, and a spokesman defended the system, saying the agency has a thorough process in place to identify and mitigate risks. The process is ongoing, and there are backups to ensure safe operations. In the statement, the FAA declines to say just what the risks are that it identified, saying that information is security sensitive. I'm Scott Cohn for the Nightly Business Report.
And finally tonight, with summer just around the corner and a lot of us making vacation plans, a new report says the U.S. is the only advanced economy, Tyler, that doesn't require paid vacation days or holidays. Several European nations allow 20 a year. Norway and France allow 30. That's why you see all the French on the south of France for the whole month of August.
The whole month of August, come mon Dieu or high water, because they don't care whether the economy is good or not. My country, I'm from Norway in part, so I'm very happy to see Norway.
Well, but you're living here. You're living here in the United States.
Maybe I'll get my Norwegian citizenship spruced up.
Well, that's it for us. Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for joining us.
And I'm Tyler Matheson, deeply in need of a vacation. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. Stocks kick off a holiday-shortened week with the Dow closing at a new record high. Today, those blue-chip stocks shot up 106 points. The Nasdaq rose 29. The S&P added 10 points. The big driver was home prices, which jumped almost 11% in March, according to S&P Case-Shiller, the most in 7 years. Also helping, consumer confidence this month rose to the highest level in 5 years. Eye care giant Bausch & Lomb was sold to Canadian drug maker Valiant for nearly $9 billion. Walmart admitted to dumping hazardous waste across California and will pay fines of $81 million. And the U.S. Mint will resume selling American Eagle gold coins weeks after running out due to high demand. Be sure to tune into Nightly Business Report right here on your public television station.